Trading Nut, episode 167.
I mean, as they say, the trend is your friend until the end, but if they don't get the trend right, then you're more than likely going to always fail no matter what concepts you use. Because, if you're in a bullish trend and you're selling, it's almost inevitable that you're going to get stopped out. Whereas if you're in a bullish trend and you're buying, unless the trend is going to reverse on you, you've almost eliminated like that 50% side of hitting that sell.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got Alex George in the house from George Mortimer. Now, Alex is only 19. Now, don't let that put you off. He's been trading for probably more years than a lot of you guys listening. He's also wears a suit quite often, and he's got an office in Canary Wharf. So how many 19-year-olds do you know like that? So he's never blown an account. And he leveraged his personal brand to get a leg up in trading, and you're going to find out how he did that and how you guys could potentially do that as well in the show coming up. Before you go and check out the video we shot where he breaks down a couple of price charts. One of them is a 50-1 risk to reward trade, so you've got to go and check that out. Now, other things happening here at Trading Up, we've still got the Genius Trader open. Doors are open for that. Massive 75% discount on that if you want to get your trading mindset right. There's Mind Hack Series number 3 is out this week. It's why trading is so addictive and how to get control again and switch off. There's also a free webinar you can check out there. All links to that are under the video here in the description. Also, Robot Builders Club, the doors are still open to that. We've got the Asia Assassin bot up in the lab, so if you want to see how that's performing, want to check out Robot Builders Club, links to that in the description as well. And finally, there's something new happening here, a couple of new things happening here at Trading Nut. So number one is we've got a new Smart Money Concept series going out with my friends over there at Ariel FX who've been on the show. So Nathan Jester, if you remember him. So that is coming out soon, along with something else which is even more special. So you want to stay tuned for that, and you're going to find out what that is very soon. And also, the demo contest I mentioned from City Traders Imperium is going to kick off in the coming week, so stay tuned for that. It's not quite ready just yet, but they do have this for you. CTI is giving away $40,000 to one lucky winner. You heard it right. That's a direct funded account of $40,000 worth over $2,300. What an amazing giveaway. No evaluation needed. You become a portfolio manager immediately once you're selected. And here's how easy it is to win. 1. Subscribe to CTI's YouTube channel. 2. Look for the video titled What is Prop Trading and How to Become a Prop Trader. 3. Give it a thumbs up. 4. Comment on why you deserve to win this free funded account. And 5. A winner will be chosen live on Thursday, 24th of March, 2022. So you have to hit that notification bell as well. I'll leave a link in the description with the steps you need to take. All right, folks, here we are in Trading Nut. We've got Alex George in the house from George Mortimer, should I say. Welcome to the show, Alex.
Thank you, Cam. Thank you for having me.
So Alex is all the way over there in Canary Wharf in London, the mixer of trading probably over there, almost like it's not quite in the city, but it's very close to the city, the new city, if you want to call it that. Now, you're only 19 years old, and you've got a journey and a half to share with us, trading for a lot longer than some of the older guys that are listening here that have been trading. So let's hear your story.
Cool. So I pretty much started trading. I entered the trading world when I was 15 years old. I just finished year 10, which is like the years in the UK. So you have obviously year 9, year 10, year 11. And I sat down and I was like, I want to make money really fast. So how can I do this? Now, like everyone, right, I'm sure, you might have watched YouTube or been on Instagram or anything like that, and you would have seen on your adverts or something, you would have seen driving a nice car, on a jet ski in Dubai or something like that, or just someone in a big house saying like, oh, trading got me here, all of this stuff. So I thought to myself, okay, cool. As I said, I want to get rich quick, so let me start because maybe I can get rich quick with trading. 3 months in, I realized that ideology of trading is BS pretty much. And but by then I kind of fell in love with the game, right? I fell in love with the industry as a whole, the whole analysis side, the whole reason why things work and stuff like that, and how big the market actually is. All of that stuff just really fascinated me. And then I thought to myself, okay, cool. Investing is a long-term game, or trading is a long-term game. And if I do want to do well, I do need to stick with it and carry on.
And what got you to the point where you were thinking that? So like you said 3 months in, all of those, that sort of like hyped lifestyle is not really what it's about. What got you thinking that, and what was the sort of, was there a decision point where you're like, damn it, I'm not going to focus on that money side of it anymore. I'm going to stick in it for the long term?
No, I think it is. I think you might be able to relate, or people might be able to relate, is when you learn something new in the market and then you see it work in front of your eyes, it's like, wow, I just spent time actually researching this, learning this on my own terms, and it just started playing out kind of thing, right? And then seeing that and like understanding how like a multi-trillion-dollar market can move is like insane in my opinion. And then the fact that you could make money off of that is even more insane. You know what I'm saying? So that's how I kind of fell in love with that side of it.
And so what was your? Oh, sorry. Go on. Carry on with your story, and then I'll dive in with a few questions afterwards.
All right, no worries. So yes, it was about 8 months in. I would have been 16 at the time. Saved up £1,000, and I didn't want to go live for ages. Right, I heard that loads of people went to live maybe 1 month or 2 months after demo trading and not really testing anything. But I wanted to get like 2 or 3 consistent months on demo trading what I was doing. So I did about 8 months in. So from 5 to 8 months would have been consistent. This is like quite vague from what I remember. And I'd saved up £1,000 from doing chores, birthday money, Christmas money, and just like some previous money I had saved up already. So it's like £1,000 for a 16-year-old was like a massive amount, obviously for me anyway. And I was like, okay, cool. I'll put this in a live account and I'll trade it. I didn't do any signals. I didn't buy any course or any program or anything like that. I was a bit too nervous to put my money in places where I wasn't 100% confident I would almost retain it. So luckily for me, I never blew an account, which is one thing I'm proud to say that I did. I think most traders actually ended up blowing accounts. But I was so risk conservative because I thought to myself as a 16-year-old, if I lost £1,000, I would never see that money again, and I have to start from square one. It'd almost be like that whole 8 months of prep and saving just be like completely down the drain. But luckily that it didn't go the wrong way. So what else? I'm just trying to think now. So I opened up my own group, my own education group. It was originally called Wick or Treat. Some of you guys watching may have heard of it. How do you
say it? Sorry, whip or?
So it's Wick. So like Wicks, and then it was or treat. I don't know.
Oh, trick or treat, Wick or treat. Gotcha. Yeah. Yeah. It must have been Halloween when you did
it. Yeah. Exactly. I opened it in October time. So late October. So Wick or treat. And admittedly, I think I opened that a bit too early. I think maybe I should have refined myself a little bit more, but I loved teaching, still do, but I really loved the idea of teaching people and just expressing like what I know I was pretty decent at. But I do wish I started it a bit later so I could have focused on myself a bit more. It didn't take too much of a hit on my trading, but at one point I was a bit, low, and then, but you've got to have the mental capacity to bring yourself back up. And then I met Matt, which some of you guys, if you do know me, already, we opened up a new business because we both had, Wick or Treat. He had the 1%, and then we opened one called George Mortimer, which is what we're still running today. It was about 1.5, nearly 2 years ago. So that's kind of the business we're running now, which is started off primarily as education, and now we've kind of transitioned over to the fund side of things. So we're actually trading under a MAM structure for clients pretty much, and we'll manage their money there. So that's pretty much our main focus now. So I've been in the trading game say 3.5, nearly 4 years now. So yeah, that's my journey.
Well, quite a journey for a 19-year-old as well. Now, diving back into that story, so it sounds like you're self-taught. You didn't do any courses, or you didn't buy any courses.
No. So that's where, I didn't buy any courses. But about, I think it was 2019. Was it 20? Yeah, it was 2019. Someone called Fredo took me under his wing because when it comes to Instagram, I was always doing Instagram lives. I was really trying to grow that side of like my personal brand, AMG_FX. That was like me, AMG. People know me as that in the Forex space. And then I was almost like being watched by this guy called Fredo, right? Big shout out to him, by the way. And he messaged me one day saying like, I want to take you under my wing because you're trading something kind of similar to my ideologies, but I want to refine it for you. So he took me in and then pretty much just showed me the ways. And then, so that worked out pretty well.
Cool. And so this guy, I mean, actually, it does go to sort of show, if you can put yourself out there and even just growing your personal brand or just doing something a bit different to then almost, law of attraction, bring somebody to you that's going to teach you the ways. I mean, what were you doing before you met Fredo, and then what changed after?
I was doing the basic retail stuff. I mean, it was like all the... Sorry, man, I might have to cut that one out.
That's all good. That's all good. We'll leave it in.
Okay. So
you're doing the typical retail stuff, you said, yeah?
Yeah, typical retail stuff. So it'd be the trend lines. It'd be the average, support and resistance stuff. There was, to be fair, I don't remember all of it, but I never dabbled too much with indicators though, which I'm proud of because I know a lot of them are complete BS again, similar to retail concepts, but it was that basic stuff. And I tried to kind of understand the whole smart money side of trading. And then that's when obviously Fredo then took me in.
And so did he take you in because you were doing the retail stuff or because you were trying to introduce some smart money kind of stuff into it?
Yeah. So I was trying to introduce some kind of smart money thing, but there's almost like two sides to the smart money side. There's the smart money, it's literally called the smart money side, and the whole smart money concept wording or the institutional trading wording is, in my opinion, a marketing ploy to draw people in. People are like, oh, trade with the banks, trade with the 10%. And it's just like, it's a bit too like, you can tell it is like right now it's just completely rinsed. It's a very attractive buzzword, institutional or smart money. They're all very attractive words. And then there's obviously the side of it that, there's not really a name for the way that we trade. It's more, I don't know. I don't like calling it smart money because it's not. It's trading based on liquidity and volume and inefficiencies in price. That's all it is. But yeah, he brought me in because I was trying to like dabble into the smart money side, and he kind of took me out of that whole nonsense and brought me into the right side. So again, big credit to him, and I always give credit to him for that because that's I owe a big part of that to him. So
I suppose did this Fredo character give you any confidence that he knew what he was talking about and he wasn't going to be just feeding you a whole lot of rubbish? And so you felt what was that? What did he do to give you that confidence?
I can't disclose some things, but right. I'll just say that it was a very amazing thing for me. I can't talk. I don't know if I can talk about it publicly.
So he was quite transparent in what he was doing. Is that what you're trying to say?
It was transparent, and there was other things as well that he introduced me to, and other people as well. That's as far as I'll go. Okay. Other people that he introduced me to. I was like, okay, cool. If he's helping this guy out how to trade, and most people know him, then I'm in a very lucky spot at the minute. Yeah, and that's that. So that's it. Yeah.
So I'm guessing that like this guy, and look, this is for you guys that are younger. You would have been what 16? You said at the time, maybe 17, perhaps.
2019, I would have been. Yeah, I would have been 16.
Okay, right. So he's obviously seen a 16-year-old on Instagram and gone, look, I'm going to give you a helping hand, and because you're a young person, you've got your whole life ahead of you, pass on some of my knowledge. That's fantastic. That's great to hear. So something that other people out there who are in your boat or were in your boat, are in the boat of a 16-year-old might be able to think about a different way of trying to go about this if they're struggling at the moment. Now,
I give a bit of advice to any 16 or any under 18-year-old that is watching this right now. I will say to you, if you're ever given an opportunity to be mentored or taught by someone who has an experience, not necessarily in trading, but in business, I'd definitely recommend you take it and listen to everything they say. You might come across a few charlatan people. However, if you come across someone that's correct and someone that truly wants to help you, honestly, it will benefit you more than likely for the rest of your life. Take every opportunity, especially because you're young, you can afford, or you don't have the responsibility to, I don't know how I'm trying to word this, but almost like you don't have all that responsibility to bring on board with you if they are a bad person. If you meet someone, they're a bad person, and you take on their advice and you lose stuff, it's not like you're going to lose your whole life. You know what I'm trying to say?
You haven't got a wife and kids, basically. You can risk as much as you want up until about 30, and then you've got to probably taper it back a bit. Exactly. Okay, yeah, that makes perfect sense. Now, so you learn from this guy. I mean, like, he obviously taught you the technical side of things. I mean, what did you do around the sort of the emotional side of things, or was that just inbuilt naturally? You had no issues with taking losses and following rules and that sort of thing?
Yeah, so I didn't really learn. I wouldn't say I focused on the psychology side with him. I think that was more just an experience thing, if I'm honest. I don't think psychology. So when you see psychology in, say, trading courses or YouTube, I think it's not something you can then just watch a video and this is trading psychology, and then take it on board and you're completely fine. I think trading psychology videos are making you aware of what could happen, but you will still experience that bad trading psychology, especially if you're new. So, like, for example, I could go to a YouTube video or I could teach Novice Trader 1 and say, when you lose, you're going to get very angry. And, that's not going to make him not angry. That's just going to prepare him. But as experience goes on, he is going to get better and better and better at dealing with losses. So when I took my first ever loss, it was £7, and I remember it, and I was like shaking because I was like, fuck, I took my first loss, you know what I mean? But now I could lose a pretty sizable amount of money and I wouldn't really be too affected. But that is because of the experience I've had. It's not because someone told me, oh, you're going to lose and you should be fine. You know what I'm trying to say?
Yeah. So with a lot of this, it's burning it into your brain. The longer you do it, the more often you do it, the more comfortable it becomes, and it's just becomes part of life. To get to that point, it's the tough part, right? To get to that point. So how much trading were you doing back then when you were being educated by Fredo?
So I was still in school. So I was trading in school and I was trading outside of school as well, and I was always just trying to learn in the morning, during the day, so lunchtime and break time. Sometimes in class, I'd have my phone under the desk, trying to I wouldn't learn from him there, but I'd be doing analysis or taking trades whilst in class. And then I'd watch some videos and stuff. And then I didn't really focus on his course as such or whatever he had. I'd watch and understand some things he was saying, then I'd just always try and implement it on my own chart. So it wasn't like I was devoting my whole life to his videos and stuff and to his mentorship, but he did help me and just give me hands when I had questions and stuff. So, but yeah, it'd be pretty much throughout the whole day that I wasn't in school.
And what were your friends and the family thinking? What the hell's he doing? Did you have any social life back then?
Funny actually, because we just hosted a networking event and one of the girls that went to my school attended, and she was saying to me, I remember when you were trading in class and people would say, oh, what's he doing? He's not going to make it and all that stuff. I didn't even know they said that personally. And even if they did, I always stress this. I've always been quite good in not letting someone else's opinion just try and run my life, because I didn't get here, right, where I am because of someone's thoughts on what I'm doing. So you have to follow a strict pattern of behavior. Don't let someone's opinion impact your outcome. So, and my family, my mum was always pretty lenient with it. She was like, yeah, it's fine, as long as you're happy and stuff. My dad was always a bit cautious of me doing it, and I understand that. And to be fair, as a dad who probably knows nothing about trading, I would be cautious for my son as well. Because I was saying, I don't want to go to uni and all that stuff. It's more a security thing as a dad. I think, he just kind of wanted me to be safe and be secure, which is totally understandable. But now as time goes on, as time went on and, results started coming through, I think they kind of understood like, okay, yeah, it's fine. And, you know, I ended up not going to uni. I finished sixth form last year in May. So yeah.
And so what happened to that £1,000? I mean, how did that grow, shrink? Where did it get down to? What was your lowest account balance at one point?
I think lowest account balance was, I think, in the 700s. But that was with 1% risk, right? So I must have lost quite a decent amount of trades. But I was probably trading maybe 5-6 times a day, winning some maybe 1% trades and losing some 1% trades. And that's when my risk to rewards was like, you know, the 1-to-1s, 1-to-2s, all of that stuff. I think got it down to about 700. And then I think I just started kind of had this almost curve. And it was like, I started understanding a bit more. I think that's kind of around when I met Fredo and stuff like that. And that's when I started really being able to understand how the market actually moves, because trend lines are illogical. I mean, trend lines is just a vague concept I try and talk about for retail. But I think, yeah, just ever since I learned that whole concept of volume and liquidity based concepts, then that's when it started. I don't know. To be fair, I can't tell you what it turned to, because I would have withdrawn some, keep growing some, because I would have put some into crypto as well, because that's obviously how my crypto fund, my crypto investments grew as well. But yeah, lowest point was 600 or 700, around that.
Okay, and so where did it end up? What was the final total?
Final total.
And I'm assuming you sort of shut it down and moved this across to the fund, or did you, or your crypto investments?
So I think it grew to 2,600, and at this point I was in actually in a hotel with Matt, to be fair. So that was a 160% gain.
Yeah.
And then I withdrew all of it to put it into crypto, and then from then I've just put money in live accounts and have traded that as well. And then since then, obviously, withdrawals have been made and stuff, and now we've just kind of transitioned to this fund. I still trade in my personal accounts. I've got two trading accounts that are my personal ones, and then we've got the fund as well. And then obviously I've got my crypto and also crypto futures as well, which have been pretty good. So I have a crypto futures account too. And yeah, so money's just kind of been withdrawn. I don't have like an exact limit of what I've made overall totally. Yeah. You know what I'm saying, but it's been like,
yeah, you got to that. You got to the 2,600 mark, and you were like, "Okay, great, I'm going to withdraw that." Yeah,
from that 1,000, yes.
Yeah.
From what I can remember, I can't give you, but I know it's definitely in that
vicinity. So just getting a view on, you were doing 1-to-1s, 1-to-2s. Did that change with the liquidity void kind of thing? That you're getting?
Yes, it's the concept. Yeah. So once I started understanding liquidity truly and volume truly, then yeah, that's when it started to change. Because what's great about it, it's literally just precision based, isn't it? So, you know, we go on the seconds time frame, trade off what we call an SC, and you know that would literally be it'd be like a 2-pip region, right? So you buy it at the top of the SC, for example, and your stop loss is right below it. Now it'd only be like 2 pips, and then obviously your TP could be at like a swing high, swing low on like a 4-hour time frame, and you'd be getting like a 1-to-20, 1-to-30 based on that. So yeah, it all changes that. Whereas a trend line, you can't really, you can't tell where and when it's going to fall, type of thing. If it does break the trend line, does that mean the trend is going to reverse or not? Whereas with this way of trading, if the SC breaks or if the inefficiency is broken or whatever it is, that kind of invalidates your whole setup as a whole and potentially the whole trend, which is what's great about this way of trading.
And so you're down on you said a 2-second chart. Was it a 2-second, 2-minute chart? 2-minute? Or?
No, it's a 30-second.
30-second chart. 30-second chart, getting your entries, sniper entries with a 2-pip stop loss kind of thing, is it?
Yeah, it's all varies, depends on the setup. But yeah, sometimes it'd be a 1-minute chart, 5-minute. But you never start on that time frame. You always start with the highs, identify your trends. Like structure is the backbone of trading, of technical analysis. You always need to get structure right. If you don't have your structure right, you're more than likely going to fail no matter what concepts you're trading. If you can understand structure, then that is pretty much your gateway into success, in my opinion.
And there's a couple of good videos actually on structure on the channel. Just go and have a look for them. These guys just sort of break down perfect ways to work out how to work out structure if you're unsure. Now, So you at this, let's jump forward into what you're doing now with this fund and the fund account. I mean, how many trades are you guys taking a week? And I say you guys because I'm guessing Matt's taking some and you're taking some.
Yeah, so it's all dependent on the week. To be fair, I think last week we had quite a few. To be fair, we had about 5 or 6, and the week before it was like 2 trades. But the thing is with the way we trade is if there's maybe not a lot of trades in the week, one trade can set you up for the whole month, which because it's obviously like quite a large risk to reward with the way we trade. So, if we make say like a 10% trade, we technically don't have to trade for the rest of the month. We don't need to because that's pretty decent in terms of like if you have a massive account, then that's a sizable amount of money for not only yourself but the clients as well. And there's no point putting more risk on the table. But then again, you could put more risk on the table because you're only risking 1%, which means if you lost that trade, you'd be up 9% still. But if you won, you'd be up an even more sizable amount. But yeah, last week we had about 5 or 6, and the week before we had about 1 or 2. So it's just dependent on the week.
And so, are you risking 1% per trade or a lot less with the fund? Yeah,
it depends on the trade. It'd be around 0.5 to 1.
Right.
It'd be in those regions, depending on the trade.
Okay, so you might be getting 20 to 1, 10 to 1 kind of wins, risk to reward kind of ratios on average.
So in January, we did a 0.5% risk on all positions, and we didn't target an exceedingly large amount of reward in terms of like the risk reward ratio because it's January. I mean, it's kind of notorious for not being the best trading month in the year. So we wanted to kind of secure in profit, which we did. So that was good for us as a business. That was a good business decision. February we're being a bit more risk adverse in terms of like opening our reward a bit more. And that's the kind of strategy we're going with. If there's no confidence, or not if there's no confidence, but if there's a lack of confidence in terms of market conditions, then we will reduce our risk and stuff like that based on a number of factors.
Cool. And so what instruments are you trading across? You mentioned crypto in there, but what other things are you doing?
So is this me personally?
Yeah. Personally,
personally,
I suppose. And I mean, if the fund personal is different from the fund, then yeah, just split them out.
Yeah. So the fund is purely forex based because we didn't want to branch into crypto as of yet because I mean, I'm sure you understand if we lost like 20% of clients' money in spot, for example, which is very doable in crypto, as you know, it would have been a bit of a big thing for us, especially being a new fund. But now we just want to stick with forex. But however, for myself, crypto, so spot, futures as well, and then obviously forex, which is my main focus. And actually just dabbled into equities as well, which I show near the end of the video, which is a really interesting market to trade as well. But they're the 3 asset classes that I trade.
And so moving from into stocks, I mean, I know you've only just moved in there, but I mean, is there any sort of difference that you've had to make for your approach? Because I get the impression I don't do stocks at all really. So, but I've had a look and I some sort of can't see it matching very easily. What are the main differences, and have you had to adapt things?
In terms of technical analysis, mate, it's the same. It's the same principle, same concept across any asset class because again, it's based on volume and liquidity. It's all the same on every single thing. Obviously, the only difference is that stocks are more volatile in terms of their percentage movement because they are less liquid. It's a less liquid market compared to, say, Forex. And then crypto is way more volatile because it is a less liquid market compared to stocks and Forex, right? When I say more volatile, it means it moves more percentage per day, if that makes sense. So at Forex, you'll rarely ever see a 1% or minus 1% move in price, whereas stocks, you could see maybe a 1 or 2% or 3% move, depending on the stock. And then crypto, you could see that every hour, you could see. One thing I would say as a tip though, guys, and this goes for Forex as well, but mainly stocks, when it comes to studying stock fundamentals like earnings and dividends and all that stuff, a lot of the stuff you'll see on YouTube is complete BS. Same with any other platform, because one guy will be telling you, if earnings is good, then price will go up, and if earnings is bad, then price will go down. It's all just crap. If you want me to be dead honest with you, it's something you need to. The best advice I can give you is study the economic side of fundamental, like really understand the economics of it, and then implement the economic logic into the charts, and then combine it with technical analysis, and it works over any asset class that you're trading. So that's the best thing. Don't go on YouTube and watch what does earnings do or what does NFP do. Don't do any of that, because honestly, you'll just be wasting your time. You need to correlate it with your technicals and the economic side of it. That's the best advice I can give.
Cool. Now I want to sort of actually, first of all, what pairs in the Forex market are you trading, or have you got no real?
Yeah, I've got set pairs, and I think it's a very important thing to do as well, especially if you're learning. But I trade AUD USD. I trade. Apologies, mate. This Discord's going off on this computer. Right, so I trade USD JPY, AUD USD, Euro USD, GBP USD, and I combine all of that with DXY as well. I don't trade DXY, but I use it for a correlator.
Okay. And so what gave you the sort of whole idea to transition into a fund?
So to be fair, when myself and Matt met, it was like we kind of wanted to know what we both wanted to go to in the next 5 years or whatever. And I'll expand on that 5-year thing in a minute. And the reason we spoke about that when we started the business is because we wanted to go into business together with the same goals. If we both had two different ideas of where we wanted the business to go, it would not have worked. Like, definitely not. And a fund, or a hedge fund, as we said, is what we wanted to do originally. And we thought we'd open that in, say, 5-6 years. But because we migrated into these premises in Canary Wharf, we networked with certain people who helped us open a fund. Pretty much was one of our main goals, which was one of our main goals. And I don't know why we wanted to. I think it's just because we know what we're good at, and if we make other people money, then that is just a big thing for us, and obviously it builds our business reputation. It builds client relationships and stuff. So it's I don't know why. It's more just it's nice, I guess.
It sounded like it was a logical choice for you guys to do.
Yeah.
So what does your typical trading day look like then?
So our typical trip. So I wake up at 5. I think everyone in the office actually wakes up at 5, and we commute to the office, and we get in for about 6:30, 6:45, and we do like our pre-London analysis. So we'll analyze all our dedicated pairs. We'll go through the fundamentals for the day, just to kind of we don't dedicate too much of our time on fundamentals because it's not massively important to our trading models, but it's fine. And then we'll just analyze literally and trade throughout the day. If there's nothing available currently, we'll work on our business on the side. And that is literally our trading day, and it ends at around 4, half 4, and then we'll go home.
Right. And the trade's typically done within the 4-hour period if you're getting in out of 4-hour candles?
No, it depends on the day. It can literally be so I took I think it was the NFP, most recent NFP. I took a Euro USD sell. I don't know if you saw like all the slash USD pairs melted. Do you trade, by the way?
Yeah.
Just out of interest. So you just see it there, so you'll be familiar. All the slash USD pairs melted, so I got in a sell on EU, and that lasted about 2 hours max. But then I got in like a GJ trade like 2-3 months ago back when I traded GJ. It lasts like 2 days. So it's all dependent on the setup, the targets, the liquidity, the volume. It's all dependent on that.
Yeah. Okay, cool. And so if you had to sort of give somebody who was starting out on this a pathway forward, what would you recommend?
Good question. I think definitely find a mentor. I think YouTube is a lot of hopium, a lot of just hype boy crap. There's so much crap and misinformation on social media. You need to find someone who is credible, has a credible background and stuff, and let them help you at least. You don't need, don't let them spoon feed you, because that's probably one of the worst things you can do. And that's why I go against signals so much, because it's like if you're letting someone almost make that money for you by giving you the trade idea? What if that signal provider just died or left? You'd literally left with nothing. So you need to be able to trade independently, do all your own things by yourself, and please do focus on risk management. That's another thing as well. I know it's a very broad thing, but I think a lot of people can learn from proper risk management stuff. I just say really just learn from people around you, network, and grow your personal brands as well. As much as people hate being on social media, I think that is a big thing to do, is to grow your social brand, personal brand, because you can meet people that can change. Like Matt, I met Matt through Instagram because we were both growing our personal brands, and now we've started a business together, and we've managed to get into one of our offices, which we had as our lock screens, which we did. This office was our lock screen on our computers when we first met. So, that's definitely a big thing for me.
So it just completely off the trading topic, but I mean, like for somebody who wants to take this advice and go, right, I'm going to grow my personal brand, to try and network, to try and get in front of other traders, what would be the first thing or top two things they could do?
Good idea. Good question. So say, for example, Instagram, what I did, I'm literally going to tell you what I did. It's no secret. I just followed a bunch of people who were interested in trading. So I'd go on like Astro FX's followers, and I'd follow all the people that were following them, so I could kind of just show me, if that makes sense. And I'd be posting as well on my stories on my Instagram, like motivational stuff. I'd be posting trades that I'd taken, trades that I lost, and I'd just follow loads of people. Because what following does, I know it sounds bad, but if you're following all these people that are interested, they're going to click your page and they're going to see, okay, he's a trader. Oh, he's giving out good advice. Or he's giving out this, that. They're going to follow you back, or they may not follow you back, but it's not a risk. It's not a risk at all. You're just following people. They don't follow you back, you unfollow them. If they do, you can either still follow them or unfollow them. That's one of the ways I grew it. And I know people might be like, oh, it's not like they didn't find you. It doesn't matter. It's still like some of the people that I've followed back in the day still follow me now. So that's one thing. And then like loads of other traders' pictures, go on comments, comment on other big traders' pictures and stuff, because people will see you. It's all about getting your name out there and being and letting people see you. And then obviously at the same time, give value on your Instagrams or whatever it is you're doing. And that will help you a lot, because no one will follow you if you're giving no value.
Yeah, so that's really insightful. Nobody's ever talked about this in the any of the episodes I've done. So if you guys are out there, you're on social media, you're sort of finding that you're getting sucked in, then maybe this is a way to sort of let the sort of goodness come to you, as opposed to getting, honed in on somebody else's profile. Still, make sure you do follow the Trading Nut stuff over there on Instagram, and hit subscribe on YouTube as well. Anyway, let's get on with the rest of the show. So, price chart. What 3 things would you recommend somebody study if they were an intermediate trader?
Structure, number one. Always number one. Always will be number one. If you don't get the trend right, I mean, as they say, the trend is your friend until the end. But if they don't get the trend right, then you're more than likely going to always fail, no matter what concepts you use, because if you're in a bullish trend and you're selling, it's almost inevitable that you're going to get stopped out. Whereas if you're in a bullish trend and you're buying, unless the trend is going to reverse on you, you've almost eliminated like that 50% side of hitting SL. So now all you've got to work with now is the concepts. Number 2, I'd recommend studying price concepts that are volume and liquidity based. Now, I don't know if you can find a lot of the things I trade on YouTube, but that's when it comes to finding a mentor. Now, I'm not putting myself out there, but there are a lot of mentors that do trade relatively similar to the way that I trade. But I'd recommend picking them up, and they can almost give you a guidance. I can't personally give you a guidance on what to do after that. And that's why I'm going to stop at 2 as well, because it's also different traders' perspectives as well. Everyone has a different perspective of the market. Like the way I approach the market will be completely different to the way you do it, Cam, and the person watching this right now. So I'm going to stop at number 2, because everyone's perspective is different. They should find that out for themselves, or be told it by their mentor. So that's my advice.
Cool. And what about from a mindset point of view? If somebody's struggling, you obviously had some clients earlier on when you were you still take clients on board. But I mean, what do you teach people in a way of like getting their mindset right? I know you did mention something quite good at the start of the show. Maybe you got another idea.
In terms of like if they're losing.
Well, if they just can't seem to stick to like the discipline that's required.
Okay. Oh yeah. That's actually a good thing. So one thing I'm very passionate about when it comes to trading is having your actual trading model, a real trading plan, real rules you need to stick by. If your plan and trading model is good, then there's no reason why you can't be relatively consistent. And if you are not consistent, it means you're not following the plan. But you need experience before you get a good trading plan. So I'd just say, honestly, if anyone watching this who's maybe struggling right now and you've been in the game less than 18 months, honestly, you have nothing to worry about, because I think that is like the 18-month period is probably the sweet spot almost for like the learning side. So you should be taking losses in this time, because it's like, I don't know how to explain it. I don't know how to put it into words. I'm trying to think.
Yeah, look, it takes time, right? I think what you're trying to say is like you've got to basically go through the heartache and pain, and it's going to take at least 18 months before you can pop out the other side and stuff starts to sort of feel normal again. Yeah. It's like going to the gym, I suppose. If you go to the gym, well, that's what I've noticed. I started going to the gym about a year and a half ago, and only now. A year after, the last 6 months haven't been too bad, but I struggled that first year. I didn't want to go to the gym. It was just so much resistance, and even doing the exercises, I always struggled with them. I couldn't even do them. It was just weird.
I started the gym about a week ago, and I felt almost like on the verge of throwing up for the 2 times that I went, and I hated it. Honestly, I hated it so much, but you saying that has given me a bit of hope, and it sounds similar to trading, so maybe I should just stick through it and then eventually get better. So,
well, I've gone crazy now. Now I'm going like literally every day of the week almost. And I'm doing yoga. I'm doing. They got a massage chair there. I've bought the sort of top membership stuff, so I get all the good stuff. And then I'll just go in and do like anything. I'll even do legs, which I never used to do. And my legs are shot, so it's helping me. Now, back to trading again. If there was one thing you recommend any retail trader spend the next month mastering, what would it be?
Structure, because it's like the thing is it's so basic. So what that means is that people just kind of neglect it, and they'll be like, okay, I'm going to focus on the more attractive things, like whatever it is they're trading. I don't know, but structure is very unattractive. It's almost like it's like the preschool, but no one wants to go back to preschool because it's just stuff like, I do know it, but more than likely they don't know it. They just know the very basics of it. But like I do loads of public structure stuff. So if anyone goes to my channel after, there's loads of stuff there. And is there some stuff on your channel as well?
Yeah, I think I've done it. I think I mentioned it at the start. Yeah, so there's a couple of videos. 10,000 hours at a price chart done in 10 minutes is all about structure. And then there's a 2-part video series from Matthew Todd, who basically broke down his way of doing structure, which is probably different from yours, and everyone's got their own way that they decide how they're going to do it. So it's a bit like, it reminds you of like when I learned to build websites. It was a bit like the first thing the guy taught me was into this course was what's a pixel. It's like once you knew what a pixel was, everything else could come from that. And it sounds like market structure is what you're saying is almost like the pixel is to a website. Everything's built upon that. I mean, really, it's probably a tick, but everything's built upon market structure, and you can use that as your base. Right, quick fire round here. How long did it take you to go from newbie to consistently profitable?
Probably, say 15 to 18 months. I'd say from like when I first started, so like 15 to then.
What's your favorite entry setup?
Favorite entry setup? Is that in term what
just generically what like if you've got a favorite setup versus another setup?
Okay. Like the charts.
Yeah.
Okay, so from my it probably make no sense to you, but when a sponsored candle takes liquidity, breaks structure with a very strong reaction, that is what I like to do. And I like to keep my stop losses below 5 pips. So anything below 5 pips is like a sweet spot.
Do you have any strategies to exit or manage your trades?
Yep. So the best advice I could give in terms of what I trade is the same rules you use to enter, the same rules you should use to exit. That's the best exit plan.
So find another entry, basically.
Yeah, but on the opposite side.
Yeah. Do you have a recommended trading book or resource?
Not a trading book, if I'm honest. Maybe Candlestick Bible, but that's very basic stuff. But I'd say in terms of psychology, if you're into that spiritual stuff, The Power of Now is very good for your psychology. I really like that. Think and Grow Rich is good. Outwitting the Devil is really good as well. It's not really psychology, but it's quite good. And if you haven't read it, it's a very basic and novice book, but Rich Dad, Poor Dad, it just gets you excited about the entrepreneurship and trading world, I think, personally, and investing.
That's how I got started in all this. I read that book. My wife got it in a charity shop for $2, and here I am. Many years later. The other one, Outwitting the Devil, was Napoleon Hill, and the other one you mentioned was Eckhart Tolle, The Power of Now. So if you guys are looking for that.
48 Laws of Power as well, if you want to be a leader in something. I think that's definitely a great book to read.
Now, what's your preferred broker and trading platform?
London Trading Index. They are very good. If you're not too familiar with London Trading Index, one that's very more mainstream is IC Markets, which most people probably do use.
And your MT4, MT5 platform, is it?
MT5 all the way. That's my favourite. MT4 is too slow for me. I don't know why. They're much different. MT5 is quick, easy, and instant. So,
hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Do you want to walk us through your worst ever trade?
Worst ever trade? Let me think. To be fair, I haven't like, I wouldn't say I've over risked like really badly, if that makes sense. But in terms of, I could walk through something I should have done in a trade, but completely effed it up. So if you want, I think that's probably the best thing to do. So, you know, the whole shitcoin craze went in crypto.
Yeah.
I pretty much put £500 in a random cryptocurrency, a random shitcoin. And about 2 weeks later, it went to 10,000. And I was like, oh yeah, and go higher. It's maybe 50,000. And now it's at about £180. So it's kind of, I should have sold, but now I'm in a loss. But obviously I didn't lose a lot of money, but it's like I could have got a very nice return on that in a very small amount of time. So that's what I'd say.
Yeah. You're probably not the last. You're definitely not the first. Now, last question of the show. If you could leave our listeners with one piece of advice, what would it be?
So one piece of advice I'd say, and it's not necessarily just around trading, but it could be if you're not necessarily a trader, but you're maybe just an entrepreneur or you want to run a business or you're running a business, is just if you're struggling, first of all, find a mentor who can give you directions. It doesn't need to be a paid mentor. You can talk to people. You can pay someone. I find the best mentors are the people that I haven't paid for. Like I didn't pay Fredo, I didn't pay two other mentors that I have, which are more like business mentors. And I'd say network as well, right? Because networking will open gateways that you just right now, if you start networking, I guarantee you in 3 months, if you network properly, a gateway will be open for you that you've not even thought of before, and it will be amazing. So I guarantee you, start networking. You can go LinkedIn, you go to networking events, Instagram, and just talk to people. And that will open up an array of opportunities for you. So they're my two pieces of advice I'd give.
Awesome. Well, look, before we wrap up, what's the best way for the traders to get hold of you?
Best way to get hold of me is my Instagram, which is AMG_FX, if you do want to message me there. And there's other ways of messaging me, but all those details are on my Instagram.
Cool. Well, look, a big thank you to Alex for sharing with us today. Everything we've discussed here, along with all those links and his Instagram link, are in the show notes. To find them, simply search for Alex in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. Okay, so there you have it, folks. Interview done and dusted with Alex. Now, do remember, go and check out the video we shot after the show where he breaks down that, a stock trade and a Forex trade. One of them is 50-1 risk to reward, or reward to risk, should I say. And after that, go and check out the Genius Trader Mind Hack video, why trading is so addictive, and how to get control again and switch off with Andy Murphy. And also, if you're looking to automate anything, you've got the Robot Builders Club. Go and check that out. Check out the Asia Assassin bot. See how that's performing this month of March 2022. And the Smart Money series is about to hit the airwaves here on Trading Nuts. So that's on the channel. Stay tuned. You're going to find out how to get access to that if you follow me on all the social media and the like. Also, that's something special coming up soon as well. And we've got the demo contest. Stay tuned for that so you can enter that very shortly. It's all coming up soon here on Trading Nut. And last but not least, we've got that 40K funded account that you can win. Follow those follow the instructions under the video. There's a link under the video with the instructions there on what you need to do with CTI and how to get access to that. Guys, I'll see you in the next episode. Thanks for watching. Thanks for listening.